Hey everyone, it's Tim Shea here with the Shea Group Realty of Keller Williams in Beverly, Massachusetts. It's been some time since I've seen you last, and I hope everybody's been enjoying their summer. I'm here back with another freeze frame market snapshot for you to tell you how the market's doing. Now people ask me, how is the market doing? And I say, well, that matters on whether you're buying or selling. So what I've got here are some key statistics and some numbers to show you how the market is performing and what that means for you if you are buying and if you're selling. So without any further ado, let's go ahead and take a look at those numbers. What we're going to look at here is a year-over-year comparative for Essex County single-family homes and condominiums. First, we're going to go ahead and look at 2016 compared to 2017 and the change that's occurred. We're going to look at sales, and from 2016 to 17, we were actually down 4.2% in sales. This contributes to a lot of factors. Median prices were actually up. We're up 7.8% to $397,600. In inventory, we're actually down 12%. This is one of the biggest factors here, and I'll talk about it in a second. Pending supply, we're actually up 4.8%, so that's a good indicator. What that suggests is what's going to close in the next 30 or 60 or 90 days. And in month supply, when we kind of compile all of these together, this is the biggest indicator on how the market's doing and whether it's a buyer's or seller's market, and we're actually down 5.6%. Now, when I look at the market and I look at how it's performing, I look at all of those, but most importantly what I look at is the month's supply of inventory. And if you've looked at any of my past freeze frame market snapshots, you'll know that a balanced market, if you look at it on a 12-month scale, a balanced market, meaning it's good for buyers and good for sellers, is 6. You look at that month's supply of inventory as a 6. It's good for sellers, it's good for buyers. And anything below 6 months of inventory is actually a seller's market. The lower it gets, it's actually a better market. So it means how long is it going to take those months supply of inventory to sell out. And when it's as low as it has been, that means that there's a huge demand, that there's lots of buyers and not a lot of inventory. So those that are on the market are getting top dollar, and their homes are probably selling usually at a premium. Above, with the competitive nature of it, you're probably getting multiple offers in this. So if you've been buying, you've seen how difficult it is in this market, because it's not just as simple as, I like a property, let me go put an offer on it, and then just have it be accepted or negotiate. You're more or less negotiating with all of the other buyers that are out there, as long as the property itself is priced within the general range. Now, if a property is well overpriced, sometimes in this market that is still even being scooped up just because people are looking for specific locations. But pricing is a huge factor. So when we look at the market, I look specific, and I look at those numbers, I look specifically at the month's supply of inventory. So let's go down a little bit further and see how things are looking year to date. Year to date, from 2016 to 2017, we're actually up in sales 1.7%, so that's good. Median price, we're actually up 7.7%. And in total sales, we're actually up 8.8%. So those are all good indicators that the market is strong and it's vibrant and it's been moving along. And this is really the way that it's been moving over the last 2 to 3 years. It's been a seller's market for quite some time. And we haven't seen that huge flood of inventory come onto the market. And I'll talk about that in a little bit and what my sentiment is. Now let's take a look at the numbers a little bit further, because that's just an overall snapshot. I want to break it down into more price point demographics, because not everybody is the same. If you're looking for a multi-million-dollar home, that's not the same as somebody who's looking for a $300,000 home. So let's look at those numbers broken down into specific price points. The first price point we're looking at is under $450,000. In sales, we're actually down 11.7%. In inventory, we're down 13%, and in month supply, we've remained even. So when you look at this actual demographic, this is the toughest demographic. Really, anything under $450,000 is the most competitive of all of the price points that we have. Month supply is 1.1 months. That means that's all as long as it takes for that supply of inventory to run out. So if you're buying in this price point, you're really in for a good stretch. If you're a cash position or have a large cash position, that's better for you. But if you're financing it with low interest, low money down, you might be not as competitive as some other offers. So it's important that you find the right agent that understands the dynamics of the market and how to be competitive and what areas to be competitive. Because if you remember, it's not always price, but it's price and terms that make up a good offer. So the next one is 450 to 700,000. In sales, we're actually up 8.1%. In inventory, we're actually down 10%, 10.9%. And in months supply of inventory, we're down 20%. It actually should be a negative right there. And in 700 to a million, we're actually up 21% in sales. In inventory, we're down 22%. And in months supply, we're down 38.4%. But the number in the differential is really small. Plus, the higher you get in the price point, the less amount of inventory we're dealing with. There's not as many high-end homes as there are homes under 400,000 or under 500,000. And lastly, a million and over, we're down 7% in sales. We're actually down 4.9% in inventory. And in months supply, we're actually up 12.4%. So if you're in that price point demographic, we're really in a buyer's market, so anything over $1 million. So you see how when we break those down into different price point demographics, that changes the whole landscape of, whether it's a buyer's market or a seller's market. The key factor really in this market for the average buyer under 500,000 is that it is still very competitive out there. We have yet to see that influx of inventory come on to alleviate that pressure on it. Interest rates have still stayed pretty low. We're unsure as to what the Fed is going to go ahead and do as it relates to interest rates. There's speculation that there might be one more increase, but I don't think that will be enough. My personal sentiment is that we've seen over the past 2 to 3 years that there just hasn't been that influx of inventory on to satiate the buyer's demands. So when is the market going to cool off? Well, nobody really knows that, but my sentiment is that we're not going to see that inventory flood come on. And so what's going to ultimately cool off the market itself is an eventual increase in interest rates. When we see the interest rate increase, that decreases purchasing power. So when somebody could afford $500,000 at a 3.5% or 4% interest rate, when you rise that interest rate up to 5%, you decrease their purchasing power. So I think that's ultimately what's going to cool off and kind of level out the market. I think we're probably in for a good stretch of another good 2 years or so, where the market is still in this position, maybe balancing itself out a little bit more between a buyer's and a seller's market. But really what it boils down to, if you're buying, you need to figure out how to be competitive. I'm happy to share a lot of those techniques with you. Give me a call. And if you're selling, you can really get top dollar for your property right now. As long as it's priced right, it's in good condition, you can really do well for yourself. But those key indicators are pricing it right, good condition, good location, and it's in a demand area that people really want to buy. So if you want any more information about whether you're buying or selling, those numbers that I went through, or just to talk about what your property could be worth, or if you're looking to buy, what you might be in store for in a little bit more in-depth conversation, I'd love an opportunity to talk to you guys. You know you can always call or text me at 781-789-5128. You could always visit me on the web at mistalista.com. Say it in your best Boston accent, mistalista.com. And until I see you out there, happy house hunting.